Okay, hi guys, Zaheer Anwari here on behalf of the dynamictrader.com. Can you guys hear me? Can you see my screen okay? Can I get a quick hello, hands up from everyone? Let me know if you guys are out there and if you can hear me. And yeah, hi Adinda, brilliant, thank you very much. Okay, yep, all right. Anyone in the chat room, if you could all give me a hello, let me know who's there. My name is Zaheer Anwari. I'm a trend trader. I've been trading since 2007 and I trade across all the markets. So foreign exchange, stocks, commodities. As a trend trader, I don't look to focus on just one market. I'd rather have a far simpler, far more profitable approach. And that is by moving to where the money is. And it's something that I talk about pretty much every time I'm doing a webinar. Focus on the trends, focus on the bigger picture, rather than getting caught up in this sort of well-marketed route to quick riches, which is, shorter time frame trading. The reality is it doesn't work as well as it's advertised to be. A lot of people won't really want to accept that. They'll want to hold on to the fact that it will happen and hope it will happen. But the reality is that shorter time frame trading is very, very difficult and it's very inconsistent. So you want to be smarter. You want to look away from that, look at a smarter approach for us as private traders, and that's through trend trading. I've got a new website up, tdtpro.trade, guys. So if you guys want to know more about trading, if you want to get involved with some training and some software tools and really get to grips with what trend trading is all about, then please check out the following website, which is tdtpro.trade. Please ignore the picture. It's a little bit blurry, but this has only just gone up recently. So I will have a better picture up there. But lots of information on here, home, about us, if you want to register, blogs, etc. So yeah, please give this a look. Okay, let's go into the analysis. As you guys know, we have got the Brexit vote taking place tomorrow here in London. It's quite a big news item, given the severity of it, and there will of course be some kind of impact. For me, it's going to be a short-term impact before the markets settle back down into their rhythm. I've basically closed off my positions. I'm now flat. This is not something I do ordinarily. I never manually close off positions, but I don't want a SMB situation like last year where we had a move of several thousand pips in a day, and it's very real. It's a very real possibility. That move of course could happen in my favor, and then again it could happen against me. And if it moves at such a rate, then by the time our stop losses get honored, we could see serious losses on our accounts. So for me, it's better to be safe and stay out of the market rather than try and make a bit of money on this particular news item. That's my preferred approach. Whether you choose to trade it is a personal opinion, but I would recommend staying out. So let's just have a quick look at what's happening in the market. So watch list on the left hand side. Watch list on the left hand side. Monthly chart with the major levels of support and resistance, and the pink lines representing the high, the low, and the close of 2015. So these pink lines are very important. And I'm going to go through a little bit more why later on. We've also got the weekly and the daily time frame. 200 moving average is the black line, and the 50 moving average is the blue line. What we really want to see is a trend, and the way we establish a trend is by allowing price to be trading either above both of these moving averages or below both of these moving averages, and that's both on the weekly and the daily. If we don't have that combination, then we really want to be standing aside. So if you look at what's happening with the Aussie dollar, US dollar, first of all, it's very much in a consolidation and it's inside these pink lines. For me, that's a reason enough to be standing aside. I want to see price either trading above the high or below the low. That's where I can then start developing an edge. And trading is all about establishing high probability environments. When the market's going sideways, you don't really have the probabilities in your favor. It's all over the place. What you're looking for is a trend direction. If I just open up the monthly chart, there is a good trend to the upside. another trend to the upside, another trend to the upside, move to the downside, move to the downside. In these periods where the market is going sideways, you really want to be standing aside. All right. And you can see also below the 200, but above the 50, but just really going sideways. The 50 is quite flat. And the same on the daily time frame, sort of oscillating. And the 200s are flat. The 200 is flat. The 50 is flat. There's no edge on this particular currency. It's a very unattractive looking chart. You know, as a trader, you want to know when is a time to be trading and when is a time to be standing aside. You don't need to be trading every single currency every single day. I know people have their favorites and, you know, they trade the euro dollar a lot or gold a lot. It's just a very amateur approach. Having an attachment, it's first of all, it's amateur and it's very unhealthy. Your attachment should be for something only for as long as it's paying you. This is not a, you know, this is not a love story. You really want to get involved in the right currencies, and part and parcel of being a good trader is knowing how to establish a portfolio of good trades. All right, let's move on. Aussie dollar, New Zealand dollar. Aussie dollar, New Zealand dollar. This was the last time that I traded it. Nice big move to the downside, very profitable. Since then, it's just been going sideways. However, price is now pushing through this support level. If price closes below this level, then we could see weakness to the downside. Now, in the previous example, I said that if price is inside the pink lines and it's in a consolidation, then I stand aside. If price is inside the pink lines as it is here, but it's trending, then I may look to take the trade, but reduce my risk. So if you look at this, this is starting, well, this is heading to the downside in the direction of the long-term trend. Clearing this support, if price closes below this level, then we could see weakness to the downside. This could be an area where you could start taking some profit. If it clears the low and the figure 1, then we could see price, you know, really going to free fall to 0.9, 0.8, 0.7. So look at round numbers. Round numbers are very significant. So look at your round numbers for levels where price can move towards. Okay, Canadian dollar, really sort of not really going anywhere. We've talked about this before. Nice trend to the downside, but in recent months, it's just been going sideways around the 1.3 level, acting as resistance. We want to see this low cleared, price to move towards 1.2, the low, and then further weakness. If you are looking to take any trades, reduce your risk. If you look on the weekly, nice trend to the downside, came back to the weekly 200 and the 1.3 level. So nice resistance zone there. And this major pivot from 2009. So nice strong resistance level, price has weakened. However, we need to see price clear this level. On the daily, below the daily 200, it's sort of above and below the 50, but it's currently below the 50. So all in all, this is suggesting further weakness. However, at the moment, it's just going sideways. And you can see that right now very clearly. Here is a trend. Here is a move. Here is a correction. What we're now looking for really is a break and a close below here and further weakness. Okay, let's have a quick look at the euro dollar. Here is another example of a currency that's inside the pink lines. Because it's inside the pink lines, I'll be looking to stand aside, you know, and not only is it inside the pink lines, it's actually just going sideways. What we want is a trend. Here is a trend. This was the last time where I traded the euro dollar. Since then, it's just been in consolidation. So breaking a close below here will suggest further weakness. While it remains in these pink lines, I want to be standing aside. And if you look at the weekly, flat, weekly 50 is flat, 200 is flattening out. Looking at daily 200 is flat, very clearly just going sideways price. And the 50, if we just open it up, we can see that the 50 is flat. It's just side widening flat. What we want is angles. Look at the 200 heading down. Look at the 50 heading down. That's telling you a trend. Right now, this is confirming. Remember, lagging. Most indicators are lagging indicators. So moving averages are no different. They're lagging. And they are, what they do is they confirm what price is telling us. We can see quite clearly that price is going sideways. The moving averages are flat and going sideways, confirming what price is telling us. So I would stand aside really and not look to trade that. But as always, the euro dollar, most heavily traded currency for for lack of knowledge, really. But it is what it is. Okay, euro pound, strength to the upside, weakness. Price came back to zero. Look at the amount of movement in a single month so far. We had a nice big green bar last week when I did analysis, and since then the bears have come in and really pushed price back down. Now, for whatever the reason may be, it could be Brexit, it could be a whole load of things. For me, from a technical perspective, it's simply the round number 0.80 acting as a level of resistance, and we can see weakness to the downside. What we're now looking for is momentum back to the upside. We want this high to clear, and then we could potentially look to trade this towards 0.9 and then the figure 1. Of course, there's resistance and there's resistance and there's resistance here. So we need to be aware of the various resistance levels. But what we want is a break and close above this level so we could then look to take some long positions. And if we look at the weekly, you can see that the weekly 200 holding strong. Price is bouncing to the downside, weakness on the daily, but above the daily 200. So what we're looking for is this daily 200 level to hold strong, the moving average. We want to see price bounce back up to the upside, breaking a close above this level, and we can start looking to trade this. For now, not interested. This is just too messy. If you look at the weekly, it's up, up, down, up, down, up, down. It's just no trend direction on here. Range traders will have a different opinion, of course, but range trading is far riskier and it's just a lot more inconsistent. It's not as profitable as it's often made out to be. What you guys have to remember is this: range trading is where you have a resistance and a support. If you could just go long off support, short of resistance, long off short, if price action was that neat, then yeah, it would be quite easy. But as you can see, if you draw a range, it's not as simple as just going long and short of levels. There's a lot more support and resistance levels that need to be contended with. So the better approach really is to stand aside. Okay, Euro New Zealand dollar. Actually, let's start with the Euro yen. Euro yen, again, that 120 level is what we wanted to see price break through. And look at what's happened. Price has broken and closed below 120. Well, price is broken below 120. We want to see it close and then further weakness. This is something that I've been speaking about for quite a long time. Several weeks, if not months now, I've been saying be patient and let the 120 level clear. That's what's happening right now. And that's because the trend was down. It's below these pink lines, suggesting weakness. Below the 200, below the 50, below the 200, below the 50. Everything is suggesting weakness. Now, it is struggling a little bit, but all it's doing is correcting itself from an overextended bar. Look at the size of that bar from last week. That was an overextended bar. Generally, what happens if a bar is overextended, there's some kind of correction before a continuation. Okay, if you look at this example here, here's an overextended period. We had some kind of correction before another move to the downside. So it's quite common for price to correct itself after a day or two of overextension. All right, so that's the Euro yen. Euro New Zealand dollar, one to potentially keep an eye out on. You're seeing weakness to the downside, big move to the downside. Price has broken and closed below this level. So this is now a resistance level, and we could see further weakness towards 1.5. This is going to be a strong support level. If it clears this, then 1.4. Remember, any trades taken, you want to reduce your risk because you're inside the pink lines. Weekly, below the weekly 200, below the 50, below the daily 200, and below the 50. If you look at what's happening recently, we're starting to see movement to the downside. Price is now trading below this support level. So if we start seeing further weakness, then this will be one worth looking at next week. I wouldn't look to take any trades right now, but next week you may want to look at taking some trades. Okay, pound dollar, pound currencies, you know, all reacting pretty much the same way. A move against trend. Remember, we had a big red bar last week when we did our analysis. Now we've seen a total reversal and price is now back inside those pink lines. Okay, and you can see again, prices come back to retest the 50, below the 200. Price is now broken above the 200. So there's no edge on here because below the 200, below the 50, above the 200, above the 50, we want alignment. We want to see the weekly and the daily moving in the same direction, and that's currently not happening. And so the pound dollar, I mean, we've been standing aside from this for quite a long time. These pink lines could hold as resistance. We could see weakness. Price could break above 1.5. We could see further strength. It's really about letting price make its move, because at the moment it's a little bit in no man's land. Once it's made its move, so if it breaks this level, then we can look for short positions. If it breaks the 1.5 level here, then we could potentially look for long positions. But as always, we're inside the pink lines here. Reduce your risk. Below this level, we can look to allocate full risk. For me, full risk is 2%. For other people, it could be different, but I wouldn't recommend trading more than 2%. Okay, pound yen. Let's have a look at what's been happening. A lot of you guys know that I've been short on the pound yen for quite a long time. And there's your weakness to the downside. Price just really not gathering any more momentum. It's been frustrating the last few months, but that's just the nature of the beast. Okay, we can't force price. It does what it does. Below the 200, below the 50, below the 200, below the 50. So everything is suggesting weakness. And ordinarily, if it wasn't for Brexit, I would not have closed my positions. I would have just let this current pullback period, you can see that it's correcting itself. I would just let this ride out, because we had one here, we had one here, we had one here, we had one here. So this could be just the same as what's happened in the past. However, given what's happening tomorrow, we could see some big moves or serious moves in the direction of the trend or against trend. I don't know. It's just not worth me predicting. I'd rather just close my positions, go in flat, and then pick things up again on Monday. Okay, so that's the pound yen. Let's have a look at the dollar yen and the pound Aussie dollar, the pound Canadian dollar, the pound Swiss franc. They're all pretty much doing the same thing. Okay, dollar yen, we are seeing weakness. There's that 100 level, which ideally we need to see cleared, and then further weakness. We are below the weekly 200, below the 50. If we look to take any trades, we want to reduce our risk. And on the daily time frame, below the daily 200, below the 50. So we have a bearish bias, a bearish trend. So it is looking interesting. Excuse me, guys, just took some water. It is looking interesting. Look at the trend happening to the downside. Good weakness. Dynamic traders had short positions running around this level. Good weakness to the downside. Following next week, depending on what's happened, a break and a close below this level will suggest a continuation. So for now, patience and allow the market to make its move, and then we can react accordingly. Okay, so that is really all the currencies that I wanted to look at. I'm just going to go to the questions. Right, there aren't any questions. There aren't any hellos. Is there anyone out there? Can I get a hello from someone? Let me know you're out there. If there isn't anyone out there, then I am going to end the webinar here, and I won't go through the I was going to go through some technical analysis on how to improve your technical analysis. Hi, James. Okay, thanks for coming in. Thanks for the message. Aussie dollar, New Zealand dollar, monthly head and shoulders still in play. Let's have a look. If I can't even see the head and shoulders. Are you talking about this head and shoulders up here? Head and shoulders down here? Inverted head and shoulders? Is this what you're looking at? Or where is the head and shoulders? Guys, remember, chart patterns have to be really obvious. Yeah, chart patterns have to scream at you and say, hey, I'm a chart pattern. But I can't see any chart patterns. And always look for chart patterns at the extreme of trends to suggest a reversal, or in the middle of trends to suggest a continuation. So I can't really see a head and shoulders there. Inverted head and shoulders. All right, inverted head and shoulders. So I guess what you're asking is left shoulder, head, right shoulder. Well, first of all, that for me is not a head and shoulders. I did a presentation on this a while back. I don't know if anyone remember, if you had watched it. Excuse me. Okay, so I did some work on chart patterns, and if here is your head and shoulders, first of all, for a head and shoulders to be confirmed, we need to see a breakout. If there's no breakout, there's no chart pattern. And it's the same with inverted head and shoulders. There's your inverted head and shoulders. If the market does this and continues going down, this is no longer, or even goes into consolidation, this is no longer a head and shoulders or inverted head and shoulders. For this to be an inverted head and shoulders, you want to have confirmation. And the way we have confirmation is a breakout to the upside. All right, and that is in a bear trend. Sorry, that is in a bull trend. All right, so I hope that answers your question. All right. Wow, there are people coming in. Oh, okay, Maurizio, fantastic. All right, thank you. Let's have a look at gold. XAU-FX. All right, let's have a look at gold. What do I think of the retracement on gold? This is my opinion on gold. Gold is not something you want to be trading. If you look at the monthly time frame, I traded gold for many years, and this is where you want to be trading gold. I started trading in 2007, so I caught this whole bull run in sections, not all of it, but very profitable sections of this gold bull run, and made very, very good profit. Since then, it went through consolidation, which is expected. After every move, it consolidates, and we expect a breakout. As trend traders, we want to break out to the upside. But remember, nothing is guaranteed. Because this was close to the 2000 round number, major support and resistance level, in this case, resistance, price failed, went through a long period of consolidation, and then we had a breakout to the downside, which we made a little bit of profit on. But again, if you look at that weakness compared to that strength, it wasn't the best. It wasn't the worst trade, but it wasn't the best trend I've been in. Since then, the market's been going sideways. You can see it for yourself, guys. The market's been going sideways, and all of these sort of whipsaw moves that are happening is simply because the market's in consolidation. You've got 1.3 round number acting as a level of resistance, and you've got the low of 2015 acting as a level of support, and that is because of this pivot high from 2008. So there's this whole support level here. What we need to see is price break out of this. For me, at the earliest, is 1500 is when I would look for long opportunities, because it will have cleared out of this whole range, and it's above 1500 I will look to take long opportunities. Below 1000 I will look to take short opportunities. While it remains in this area, this is not something that I particularly want to be looking at. It's just not a very attractive looking chart. So looking at the weekly, if you look at the weekly, it's come to the 200 moving average. That's why there's a bounce to the downside. That's all it is. It's come to resistance and it's bounced down. If you go to the daily, well, look at what's happening. It's coming to support. So what you've got, the 200 moving average acting as resistance, and you've got the 50 simple moving average acting as support. That's why we're seeing indecision. So for me, this retracement is nothing more than a bounce off the 200 moving average. In any case, as I said, it's not worth trading. Look at the moves. Look at that move there. It's just whipsawing all over the place. It's not something you want to get caught up in. This whole area is just full of whipsaws. You want to get into long-term trends. This is what trading is all about. Take a few trades, hold, and compound. But more importantly, know what to be trading. So, Maurizio, I hope that answered your question. More lows below 2000. Yeah, well, I think I've answered your question there. Okay, guys. Are there any final questions? You're very welcome. You're very welcome. No problem at all. James, I hope I answered your question. Some gentleman there called Tarantula FX. I don't think he's around anymore. Mark Fire. I'm just looking at the conversation above me. Elaine MDG. Are these people all in, or have they gone? Okay. Right. Well, I'm going to leave it there, guys. If you bear with me 1 second. I'm just going to share some websites with you. So if you want to contact me, if you want to know more about the training and the community and how to trend trade and get away from day trading and focus on a bigger picture, please check out tdtpro.trade. A great place to start, guys, is our ebook. So please go to trendtrader.pro/ebook. This is a free ebook written by this amazing lady called Anne Chapman. This is one of my mentors. Taught me how to trade back in 2007, and she's now written an ebook. And in all honesty, this is an ebook that is going to change everything that you probably know about technical analysis and trading. It's changing a lot of people's lives, and it's a must read. There's a lot of, I don't know if you guys are aware of this, but there's a lot of bad technical analysis on the internet, where what people are doing is instead of understanding how to break down a chart and apply technical analysis correctly to then find high probability environments in the market, that's the way it should be done. What traders are doing is adopting their own style of technical analysis to then justify taking a trade which should not be taken. There's a lot of bad technical analysis out there. Read this book and get your technical analysis on point. Okay, please go to our Facebook page, guys, facebook.com/FX stocks trading community. If you're on Twitter, please go to the Dynamic Trader Twitter page. Please download Periscope and follow me on Periscope. Again, at Dynamic Trader, I do Periscopes on pretty much on a daily basis. Yeah, so that's everything. Yeah, that's everything. Okay, guys, if there aren't any final questions, I will end today's webinar. Thank you all very much for your time. Thank you all very much for the questions, people who did ask, James and Maurizio, Adinda, thank you. And guys, remember, the smart choice really is to stay out of the market tomorrow and not get caught up in NFP in Brexit. Let this week pass and pick things up again on Monday. That's the smart option. Okay, thank you all very much. Have a wonderful end to the week, a lovely weekend, and I will see you all on next week's webinar. Thank you. Bye-bye.